Welcome to this video on accounting information systems. In this chapter, we will explore the information system from an accountant's perspective. This diagram illustrates the internal and external information flows within an organization, highlighting how data moves between management levels, stakeholders, customers, and suppliers. Internal information flows horizontally at the operations level to capture transaction data, and vertically through downward instructions and upward aggregated reporting. Each user group within an organization has unique requirements. Typically, higher management levels require more aggregated information, while lower levels need greater detail. In modern business, information is a critical resource. It must be managed effectively, as it is vital to the survival of contemporary organizations. A system is a group of interrelated components that serve a common purpose. Whether we call something a system or a subsystem depends entirely on our current focus of attention. System decomposition is the process of breaking a system into smaller parts. These parts exhibit interdependency, meaning they are not self-contained and rely on each other to function correctly. An information system is defined as the set of formal procedures used to collect, process, and distribute data as information to its users. Transactions are business events. Financial transactions affect assets and equities, while non-financial transactions include other events processed by the system, like basic reservations. This flow shows how both financial and non-financial transactions enter an information system, which then processes them into information used for decision-making. Accounting itself is an information system. It identifies, collects, processes, and communicates economic information by capturing the financial effects of a firm's transactions. While an AIS processes financial and related non-financial transactions, a management information system, or MIS, typically handles broader non-financial data not processed by traditional accounting. This organizational chart highlights the distinction between AIS and MIS, showing the specific subunits like general ledger, reporting, and transaction processing systems. Key AIS subsystems include the transaction processing system for daily operations, the general ledger and financial reporting system for formal reports, and the management reporting system for internal data. Finally, this model displays the general structure of an AIS, incorporating data collection, processing, database management, and information generation for both internal and external users. Let's begin by examining data sources. These are the financial transactions that enter an information system, originating from both internal and external sources. External transactions are common, such as the sale of goods, purchasing inventory, or processing payroll. Internal transactions involve moving resources within the firm. To turn raw data into useful information, the general accounting information system model follows four main functions. The first function is data collection. This involves capturing transaction data, recording it on appropriate forms, and validating it for accuracy. Next is data processing. This includes various tasks like classifying, transcribing, sorting, batching, calculating, and summarizing the collected data. Third is data management. This entails the ongoing tasks of storing data securely, retrieving it when needed, and deleting outdated records. Finally, we have information generation. This is the process of compiling, arranging, formatting, and presenting data in a meaningful way for users. For information to be truly useful, it must meet certain characteristics. It must be relevant, timely, accurate, complete, and properly summarized for the user. Ultimately, an information system exists to support management's stewardship function, facilitate effective decision-making, and enable smooth day-to-day operations. Organizational structure is crucial as it defines responsibility, authority, and accountability. A common approach is to segment the organization by business function. Functional areas typically include production, marketing, distribution, personnel, finance, accounting, and computer services, each managing specialized operational tasks. To ensure reliability, accounting must maintain independence. It supports other functional areas with information but operates separately to ensure integrity. The computer services function can be centralized, distributed, or a mix of both. This slide contrasts centralized and distributed processing models. In a centralized system, large computers at a single site process data for the entire organization. Distributed processing, or DDP, reorganizes these services into smaller units, potentially reducing costs and improving user satisfaction by placing control closer to the end user. While DDP offers benefits, It also presents potential disadvantages, such as the loss of centralized control, resource mismanagement, and challenges with hardware or software incompatibility. Moving on to the manual process model, we see that accounting tasks are performed using paper documents. Studying this model helps link AIS courses to traditional accounting and simplifies business process understanding. The flat file model represents an earlier era of information systems. This approach often leads to data being stored in independent, disconnected files. This model suffers from significant data redundancy problems, including high storage costs, difficulty in updating records consistently, and poor data integration across the organization. The database model addresses these issues by minimizing redundancy and providing a centralized system accessed by various applications, managed by a database management system. Here is an example of an REA data model. This approach maps resources, events, and agents to create a structured and integrated view of business data. The REA model is a framework for modeling an organization's economic resources, events, and agents, along with the interrelationships between them, often using entity relationship diagrams. Accountants play a vital role as system users. They must convey their specific needs clearly to system professionals to ensure the final design meets functional and operational requirements. Beyond just using systems, accountants also act as designers. They define the conceptual system, which outlines the required information, its sources, and the rules governing accounting treatment. Finally, accountants serve as system auditors. Whether they are external, internal, or IT auditors, their role is to provide assurance, evaluate internal controls, and verify the fairness of financial reports.